Welcome to TradeTheNBI.com. This is John's reports for the 13th of Friday, and well, do we need any more ominous setups to take place? But this is the most ridiculous chart ever. Okay, so you heard me talking about this 2321 on the chart as a point that I've been focused on, well, not heavily, because we needed to see some catalyst to drive this, and the virus was certainly that catalyst. So we have to shrink all the way back, and this goes back into all the way over here, the 2018 end of it, and the dip below the red line right here that took place, that created the setup in the first place, and we're still a little ways off that, not horribly so, but it just points at, so the problem you get is we get all these confluences of previous, it's horrible on the 5K charts. So it creates just this massive confluence of lines, and it just gets to be a little bit insane. What I was hoping to do is just to expand the chart some so that we can get some semblance of where we're at currently, and you can get a clear view of it that way. There we go. So from the DOC spread that took place right over here, we started to see the shakeout flatten and begin to roll. We started to get our PK symbols because we already had green underneath. Orange was falling, but it would not dip below and reset. So we were in one of these situations that I call a no steel reset, and literally that crossover of steel that at that point becomes the catalyst. What you ideally want to see is a spike up of your orange to really begin to do it, and that happened literally the day after on this second version, where we started to get close to the ABM. Even if you wait to the ABM, as I always say, we have our numbers. If you're below the ABM, you can be short, and exactly that. There's no reason. That's why the ABM has not reset. Clean and simple. Same here with the NASDAQ, and we've seen those levels that were coming across here. It was already met. We've exceeded. We have a whole other set of ranges, same as the ES, and you can go back in your chart and look at it. We talked about when we reached our critical line where central banks started to get involved, and they shot up the euro as it was beginning, which we knew they needed to do. But even with the Fed providing $1 trillion+ in liquidity, that gave a nice spike back up. Not that, of course, Italy banned short selling and things like that, because there's going to be zero growth, or actually negative growth coming out of Italy when you have 38 million adult workers not working at all, given where things were. You've got France going under critical situations, Spain, same. And whether you call it hype, some people still claiming that it's not that serious, even though the death rate per infections that are recorded is pretty staggering in the hospitals in Italy, in north at least, have reached capacity. And they're actually begging for people who are retired, anesthesiologists and resuscitators, to please come join the ranks. So that doesn't happen every day. This certainly doesn't happen for a swine flu or even a SARS situation. So something is different about the configuration, and it's amazing to me to see as many in the U.S. still kind of discounting any of that. And fine, even if you want to, you still have to make preparations for this global supply chain breakdown and what that's going to mean 2, 3, 4 months from now if things don't get righted very quickly, which they're not going to be, because this has just begun. China still hasn't turned back around, even though they're talking about making improvements in some of these things, but by no means has it gone there. And so is oil done? No. I mean, the Saudi play and doing that was perfect timing for them, especially after they did their global wealth fund and went public with the Aramco. They were free to do it because they had money. And from a gold, like I said, when you get into these liquidation things, people have to get rid of one asset or another to cover hedges against misplaced equity positions, and that often leads to this kind of situation. So this dip below the red line, which we knew would get retraced, it in fact did do exactly that, because we also saw that we ended up with lower shakeout, and then we started to get a little bit of a decay in the DOC red. A little slow in the DOC splitting there, because most of this was just liquidation selling wasn't from a short nature. Now this is just ridiculous chart, because look at it. This drop off was so dramatic. We went through every single one of these previous algo levels that had been on this chart forever. So let me just put up a simpler one. This is that no steal reset program that I was talking about, where once it crosses the red, the counter begins and it starts counting until it gets to their 15 bars. And if you still haven't had another steal reset at that particular point, you know you're in a no steal reset situation, in which case it takes seriously crosses of steel below cyan and or above from a bullish nature, if of course you have green going over here. But at this point, when it crossed below for a short at this level, you do not have any green coming forward at that point. What eventually converts it is the higher pivot here of red with the orange crossing below, where you already still had green above, and boom, green crosses above cyan. And of course, even earlier, it was easy to see that. The reset here that happened a little earlier from the EBM was off the first pivot, but the second one was certainly much more defined and clear, and it met the threshold of meeting this dip below the red line, which I love to look for, even 80% of that dip, which right on the money with that, and that was an easy long setup for there. But it created a beautiful DOC spread. Now, I was pointing out on the Skype chat the setup right here, as the orange was spiking, we had steel crossing below, even though you still had a peak in your checkout histogram. We had these positive extremes. So I had very specific targets that I was looking for. So from a positive extreme standpoint right here, I was looking at that low, and lo and behold, it was already coalescing to a 25.22. It was a little bit lower than that for the actual low from a algo. So I'm like, wow, can you ask for anything better? It's like, okay, fine. So in fact, I'm still short from that level at this moment because fine, just prove it, just get back up to the 50%, and I'll take my stop at that particular point, which will still be a decent gain. But as we came through, this little blue setup right here is because you had the start of a steel reset right there, and it began its count. So that equivalently was a bullish crossover. Even though orange technically dips below, it does it with green still below red. And it did finally pop up. It did produce a little bit of a pop right up to the resistance of that same 522, which was the bottom of that filling of the positive extremes right here. That's why those are so important, because it was a great target range to know from anywhere throughout there from that 50%. But then, as I pointed out, when you get these lows dipping, price tries to bounce back up to it. In this case, it wasn't enough, because you still had this expressed weakness here with the DOC red in that. And then as we got closer to the end of the day, you ended up with this little chop factor. If it goes down, it will pop up, goes back down again. As far as I'm concerned, still below that 522, or in this case, even after that EBM reset, anytime you dip below it, it's like, okay, well, you got to be out or short. So if you're going to buy long, you better be buying down towards the zero, and that gives you that range of the EBM yellow to take at least a small gain before flipping to the other side of it, particularly when you steel crossing down below like that. And then, of course, the cyan rejection was evident right there, so even if you missed it, yes, you can short the lows. Do it all the time, because that tells you this is going lower. And with that spike of orange the way that was, yes, exactly. I mean, it's a significant move from 24.87 to new lows at 36.37. It's 50 points. We dream about that kind of stuff. So this is what I was just talking about in the Skype chat here at, well, it's just at midnight. I figured I'd go ahead and do this report, and I can be sleeping just a fraction, because these have been some long days. I said as soon as the steel started to move below the plus 13.5 is good short. Literally as the bar opened, that was the case. And I'm like, hey, that's worth a quick 15 points. Now it's actually more than that, but the point being is we can do this bar by bar. Not really excited about doing that, but someone who's in gambler mode, so to speak, or just wants to trade an awful lot of excess, you can play with that. Otherwise, you can just do as I did there, which was leave it from the peak move right over there. It was a pretty astronomical day, so you just keep doing more of the same. I mean, that's all we can do. You know, will I hold this all the way until the 23? No, probably not, because there'll be plenty of trades inside of it to make. Maybe not. Maybe I wake up and we'll be down a limit again, and in that case, we'd be right at the target. So, who knows? It's just the Fed throwing money at a situation where people are paralyzed. I just don't see how that works. I mean, unless you tell people that you're not going to require them to pay any of their bills, and that all the jobs that are going to be lost from airline, travel, oil, merchant services, restaurants that are no longer being attended to. I mean, you have gone into halt mode. Whether realistically or not, the fear factor of it has paralyzed. What was a vibrant and working economy 3 weeks ago is done. Interesting. Epic times. As always, though, trade well, and happy Friday the 13th.